Welcome to the Deep Dive, your shortcut to being well-informed. Today, we've got a really fascinating story. It's about this question. How does one investor, Peter Fenton at Benchmark, how does he turn, a $425 million fund, which is pretty modest for Silicon Valley, into 13 IPOs? Billions in value, and all without any flashy headlines, no social media presence.
Yeah, it really flies in the face of the usual Silicon Valley playbook, doesn't it?
Totally. So we're going to dive into some insights from a source looking at his philosophy. It's called Peter Fenton, Quiet Conviction Billion-Dollar Bets.
And this is interesting because it's not just, a venture capital story. It's about a whole different way of thinking about building things, about influence. Lessons you can apply anywhere, really.
Exactly. It's this paradox, right? An ecosystem that thrives on noise, on personal brands, and Fenton just quietly builds this empire.
Right. So our goal today is, to unpack that mindset. What are the strategies behind this pretty unprecedented success? How did his deep conviction, quiet judgment, and, I guess, a rare kind of timing, how did that build these companies?
And it seems to boil down to one core belief.
Yeah, back the founder, not the hype.
Yeah.
That seems to be it.
And wow, did it pay off. That trust became power, which led to, like you said, $13 billion exits. We're talking Twitter, Yelp, Elastic, Zendesk, names everyone knows. So whether you're actually building a company, maybe investing, or just, looking for a different way to think about long-term impact, this deep dive should give you some really valuable insights into strategy, leadership, making a mark.
Okay, so a key thing about Fenton's method, he's not chasing the latest trend. He's not betting on just a cool product. He's betting on, timing and people.
Timing and people, okay.
Yeah, he's always studying these inflection points, looking meticulously for what he calls the golden intersection.
The golden intersection, what's that exactly?
It's this sort of invisible curve, right?
Yeah.
Where the risk, the initial big risk, starts falling.
Yeah.
But genuine adoption, real user love is starting to surge. That's his moment. That's when he arrives.
Okay. Let's make that concrete. Twitter. That's maybe the most famous example.
The fine big one.
So think back to 2009. Twitter had, fewer than 30 employees?
Yeah, tiny.
No clear revenue model. Honestly, it looked more like a campus experiment than a real business.
Right. A lot of VCs were hesitant.
Yeah.
Huge perceived risk.
But Fenton, he joins the board, leads Benchmark's investment. Not because Twitter had it all figured out, but because he thought it was about to.
Exactly.
But hold on. About to. Isn't that incredibly subjective, like really dangerous territory in VC? How do you quantify that? How do you avoid just wishful thinking?
That's where Fenton's different lens comes in. He's not quantifying it with, spreadsheets in the usual way. He's looking for that narrow window. The company is clearly starting to scale. Users are coming organically.
Yeah.
But it hasn't hit the mainstream capital radar yet. He invests, as he puts it, where the adoption curve meets declining risk curve.
Okay, so that sweet spot. Traction is real, organic. The biggest unknowns are just starting to clear up.
Right. It's super precise. He wants that early but kind of inevitable feeling moment before the herd notices.
So he's looking past the surface. He's watching how users genuinely react, how obsessed the founder is with solving a real problem.
Yes.
It feels like it's rooted in restraint. While everyone else is chasing the loudest deal, Fenton's waiting.
Waiting for that quiet signal, that true tipping point. Then he acts.
You don't have to be first. You don't have to be famous. You just have to be right at that specific moment, that golden intersection.
Exactly. And it speaks to incredible discipline. And frankly, almost uncanny pattern recognition.
Yeah.
People think of VC success. They often think, one big hit, one lucky break.
Right.
Peter Fenton, 13 separate companies that went public after his bet. That's not luck.
No.
That's a system. It's built on deep observation, conviction.
13 IPOs from one guy is.
No.
Yeah, almost hard to grasp. Twitter, Yelp, Elastic, Zendesk. And he wasn't just cutting checks, right?
No, not at all.
He was on the boards, in the product meetings, shoulder to shoulder with founders during that absolute chaos of hypergrowth.
Each IPO wasn't just like an exit strategy. It was a validation of his whole philosophy.
Yeah.
In fact, those authentic, obsessed, learn-it-all founders, before the crowd even gets what they're doing.
That consistency is just wild.
Yeah, think about December 2014. Two of his companies, Hortonworks and the New Relic, they IPO'd on the same day.
Seriously, the same day.
The same day. Most investors dream of one IPO in their whole career. He gets two in 24 hours. And crucially, how did he react? No big press tour, no victory lap panels.
Right. He stayed quiet, let the companies have the spotlight.
Exactly.
And thinking about Benchmark's results, it's even more striking when you remember that fund size. $425 million, that's actually small by Valley standards.
It is.
What does that force on their strategy, that smaller size?
It forces incredible precision. Benchmark's model, it just doesn't allow for that spray and pray approach, you know?
Yeah, throwing money around, hoping something sticks.
Right. Can't do that. Every single check has to count. Fenton either had to be right, deeply convinced, or he had to walk away.
And 13 times he was right.
13 times. And this model, it pushes the partners to get really embedded, deeply involved in the founder's journey. People describe him not as some spreadsheet guy, but like a partner in the trenches.
Calm under fire.
Yeah, calm under fire, brutally honest when needed, but relentlessly supportive.
That sounds radical for VC. So the implication isn't just culture, it's operational, right?
Totally.
Fewer layers, equal partners. That means faster decisions, more unified conviction.
Exactly. And that intense focus translates directly. Deeper strategic help, deeper technical support for the founders they do back. It becomes an operational advantage in a market obsessed with just scaling up everything.
Right.
And this commitment, it reflects Benchmark's own radical model. Most VC firms, you've got layers of hierarchy, right?
Yeah.
Titles on title.
Yeah, managing partner, principal, associate.
Benchmark. None of that. No hierarchy, no org chart, no internal politics, supposedly. Just a handful of equal partners.
Right.
Making big, bold decisions together.
Wow.
This model forces immense focus, personal accountability. Partners typically only take on maybe 1 or 2 deals a year.
Only 1 or 2?
Yeah. So Fenton's in juggling like 40 startups. He's going deep on a select few. It's more artisanal, not a factory line. He once said, "We're not empire builders, we're craftsmen."
That's a great line. Craftsman. It makes me think of like a jazz quartet versus a giant orchestra.
That's a good analogy.
Everyone's an equal, listening intensely, improvising off each other, no conductor waving a baton from the top. They're just making great music together.
Right. And how did that no ranks thing change how he invested compared to the old guard?
Well, it changes everything, doesn't it? When he joined Benchmark in 2006, he didn't climb the ladder. There was no ladder.
Right. He walked in as an equal.
And that structure, which is still pretty radical for the Valley, that's what drew him in.
To Fenton, it seems like great investing isn't about who's the loudest. It's about who listens best, who really partners up.
Which explains why Benchmark and Fenton, they don't chase trends. While other firms were ballooning these multi-billion-dollar funds, getting complex.
Benchmark stayed lean. As of 2024, their newest fund is still that $425 million size.
And yet the results are just outsized.
Totally outsized.
Yeah.
All from a team of, fewer than 10 people.
Yeah. Operating with no marketing department, no PR machine, no personal brands being built.
Fenton's presence inside Benchmark. It's quiet, but clearly deeply respected. Others have podcasts, right? He has product meetings.
Others post manifestos on X.
He shows up at code reviews.
Huh.
It's a culture of substance over flash.
That depth, that focus, that shared responsibility, it's not just a structure, it's a whole philosophy. Don't build more, build better.
And that's precisely why founders seem to trust him so much.
Yeah.
It's not because he guarantees success. Nobody can do that. It's because he shares their risk. He's not some gatekeeper judging them. He's a co-builder, in it with them.
Okay, so if he's not betting on products per se, and he's definitely not chasing hype, what is he betting on?
Right. To really get Fenton's genius, you have to see he doesn't fall in love with ideas. He falls in love with
Energy. Yeah.
When he meets a founder, he's not just like ticking boxes on a pitch deck. He's tuning into the room, the tension, the eye contact, the sheer obsession, maybe even the fearlessness.
But how do you assess that emotional force, objectively? That feeling someone isn't just trying to get rich, but they have to solve this thing. They can't let it go.
Well, he's actually said the founders who grab him aren't the ones with all the answers. They're the ones asking better questions. He looks for learn-it-alls, not know-it-alls. People who are relentless learners, brutally honest with themselves, hungry enough to keep changing, keep evolving. This emotional calibration, that's what sets him apart. He's listening for signals most VCs filter out.
Right. Does this founder feel authentic? Is there that sense of inevitability about their mission? Are they maybe slightly terrifying in a good way?
Yeah. He calls it fearsomeness.
Fearsomeness.
Yeah, the energy of somebody who just doesn't ask permission, doesn't fear rejection because the mission is just bigger than their ego.
One founder described meeting him as emotionally surgical.
Wow.
Said he didn't ask about valuation first. He asked what kept them up at night, what they hated about their own product, where they were afraid.
See, that kind of question, It doesn't just build trust. It reveals character deep down.
And that's why he ends up so involved, right? Not just on the cap table, the ownership list. He's in the boardroom.
Exactly. He doesn't just invest, he commits. He becomes part of that founder's inner circle, the person who stays calm when the metrics dip.
The one who challenges the easy answer.
Right. Or when the company's, metaphorically burning down, he's the one saying, okay, let's rebuild. His ability to read people. It's not just magic intuition, it's pattern recognition built over decades.
He learned that product market fit, that can change. Business model changes all the time.
But the founder, that's the bet. That's the core asset you're backing.
Which allows him to be, what the source calls him, the invisible architect.
Yeah, it's a great phrase.
Because power in the valley, it often wears a hoodie, right? Posts constantly on X, speaks on every stage.
Very visible.
Peter Fenton, totally different game. No public Twitter. No podcast, no Medium blog.
And yet, his name echoes everywhere in tech, quietly, but unavoidably.
It's striking how his influence comes from what he amplifies. Not himself, others.
Right. He invests deeply in people who, he believes, if they're nurtured right, could genuinely bend the arc of technology. Then he builds around them. He doesn't stand in front of them.
In the boardroom, he's described as a force multiplier, not dominating. Provoking.
Reframing problems, unlocking action.
Founders literally say a 30-minute call with him could shift a product's direction or save 6 months of runway.
That's not just charisma, that's clarity.
And clarity, especially in VC, is power. His decisions ripple out.
Yeah. When Fenton backs a company, others take notice, they follow. Not because he hyped it, but because his track record kind of whispers louder than any pitch.
His refusal to build a personal brand has ironically made him something really rare.
A trusted signal in a super noisy market. When he moves, it means something. When he stays silent, maybe even more.
It's just a profound example of how real authority is earned, not broadcast.
Yeah. Subtle, patient, relentless. It really teaches you that influence isn't just about follower counts. It's built in those boardrooms, in quiet phone calls, in decisions that end up making other people look brilliant.
Okay, but here's a thought. Every investor looks like a genius in a bull market, right? When everything's going up.
Sure. Easy game then.
But when the cycle turns, valuations crash, founders panic, the press gets nasty, that's the real test of conviction.
Absolutely.
And a lot of VC firms would freeze up then, pull back. But Fenton seems to almost embrace those moments.
Yeah, it seems that way.
What allows him to keep that conviction when everyone else is losing their nerve?
I think his perspective on crisis is key here. For him, it's not an interruption to the plan, it's information.
Information, how so?
A crisis reveals who the real founders are. It shows whether an idea actually has legs or if it was just riding that wave of market momentum. It forces everyone, including him, to revalidate the core thesis. That's why he doesn't seem to mind the storms. He's kind of built for them.
Got an example?
Well, think about the 2008 financial crisis. Chaos.
Total meltdown.
Many VCs froze. Capital just dried up. Risk tolerance went to zero. But Fenton, he made one of his boldest moves that year. He doubled down on Twitter.
In 2008?
Well, yeah. The world's financial system is melting, but Fenton saw a different curve. User obsession with Twitter. Rising. The product was embedding itself into the culture. He didn't just hold his shares, he led another round. That conviction helped turn Twitter into the global platform it became. IPO'd in 2013, a $24 billion valuation.
And that wasn't just a one-off, right?
No, not at all. Remember Hortonworks and New Relic? IPOing on the same day?
Yeah, December 2015.
Well, leading up to that, the market was turbulent. Both companies faced tough questions. Monetization, scale. Fenton stayed close, helped them course correct, and bam, that double IPO.
It didn't come from just riding a hot market, it came from endurance.
Exactly. He doesn't panic in downturns because his whole model is kind of designed for it. Invest early, sure, but only when the fundamentals feel really strong.
So in the end, his superpower isn't just picking winners.
It's outlasting the noise. He knows cycles turn, hype fades away. But conviction, real conviction, if it's truly earned through diligence and partnership, that compounds over time.
Okay, so let's try and recap some of the big lessons here from Peter Fenton's approach. There's that incredible power of quiet conviction over just following the consensus or the hype.
Definitely. And the importance of timing, not just market timing, but identifying the right people at the right moment.
Yeah. And the value of depth, real focus, long-term commitment, instead of just chasing speed, scale, and, VC celebrity status.
And central to it all is that unique ability he has to back those learn-it-all founders, building trust as a co-builder, not some distant gatekeeper.
His resilience, too, his strategic patience during those market downturns, it really proves that earned conviction pays off. It compounds.
It all comes back to, I think, the profound impact of humility, letting the founders shine instead of chasing personal branding.
Peter Fenton never seemed to try to become famous, did he? Yet, arguably, few people have shaped Silicon Valley more profoundly.
That's quite something.
So it makes you think, what would it look like if you chose depth over just velocity, clarity over visibility? What if you focused on building things that actually last, rather than just chasing the next short-term win?
Yeah, what decisions might you make differently if you really focused on conviction, not consensus, on long-term intent, on character, the way you did with founders?
It prompts you to consider maybe the quiet, intentional moves you can make to create your own kind of lasting impact.
It suggests a different kind of power is possible.
Exactly. Sometimes the most powerful move really is the one you make quietly. Thanks for joining us on this deep dive. We hope this gave you something valuable to sit with.